All right, let's get you guys an update on Shopify. I know I've got a couple followers out there that specifically watch this stock. It's the one that they're into. It's where they have their biggest bag. Let's talk about this real quick. So, currently, the most important thing to pay attention to is if you're still holding and trying to figure out which direction you're going or where to load up or where to sell, whatever. Let's talk about that. If we can come down and turn this $30 range, currently marked at like 29.89, but let's just call it $30. If we can turn this $30 range into support, come down and start printing candles on top of it and stop going below it, I'll come back and make another video later today or later this week, and we'll turn that line into a green line. Until further notice, that's still a red line, where if you want to be, doing this in a simplified version, you buy green, sell red. That's what a lot of guys tell me they like to do. They see green on the screen, they sell, they see, red, they buy, and they just trade it like that. Well, let's, give you something more to work with. Let's pay attention to, where these actual green and red levels are, given the current updates in the markets, what's going on, in the bigger picture, what the S&P is doing, what the Nasdaq's doing, stuff like that. So currently, with the Nasdaq running and this huge short squeeze going on, what we're looking at here is continuing to maybe pump for another few days and not have any real worries until next week, when the meetings from the Fed start coming out and we see if this pump is going to give them some reason to get negative with their terminology again and recrash the markets next week. It's very much on the table that that's the way it goes. However, we could also move into next week. For some weird reason, they also say a little bit more muted things. They come out a little bit more dovish instead of so hawkish, as they say. And what you could be looking at is this run continues, and we're going to continue this rally for a minute. As far as if you are paying attention to watching the S&P and the levels I've given you, and I'll make an updated video on the S&P and the SPY here probably by the end of the day, it looks like we might be trying to really make that run up to the 4,100 or 4050. But really, if we get up into that 4,100 range, and markets really like to create max pain, that's where max pain is for most people, is to push all the way up into that zone and just eat up all the shorts all the way up and just tear up the bears, then get all the way high enough into that zone that people actually start believing that we're going higher. We're going back to 45 or 4,800 on the S&P, or we're going to go make new highs. I've already seen actual analysts for banks saying that they still believe we see 51 to 5,300 in the S&P in the next 6 months or something like that. So you need to pay attention to just watching it level by level and keeping a calm head. We will give you updates as it goes. I will give you updates as it goes. If these levels become levels you can trust, I will update you on that. But until further notice, this is how I'd be watching it. I'd be watching, these levels to buy on the green, sell when you get up to the red. This line right here, depending on what happens today, around $29, that could end up even becoming back to a red line if it pushes back down and starts hitting it as resistance, comes down, holds it as support, and keeps going back up. Then it continues to be a green line, which I've been using it as, a green line the last few days, even averaging in new positions that I've created after selling everything off in a profit earlier in the week. So what you want to watch for right now is if we're going to come back down here and touch on this, that we don't go below it and we turn this into support, and I'll come back and turn this into a green line for you. In the bigger picture, short term, our next major overhead resistance is basically $32. It's marked on here at $31.92. A lot of times people will front run that sell and they'll get that before you do. So until it's got the momentum to really get up into that range, that's where I give you, the basic zone to start, grabbing your profits. If you buy on these lines, or preferably down here on this, green one, and then you get up to the second one, boom, secure your profits. It comes back down for a retest. You can reload that position if you're feeling, frisky and you think the markets are still going, you still have a bullish thesis in your mind, then, at least be buying on the right levels. And I'm totally okay with people having a bullish mentality. The bulls and the bears go back and forth. No one person consistently wins more than the other. And if you look at what's been going on for the last few months, the Bears have been in control. Until proven otherwise, the Bears are still in control. It's very dangerous being a bull right now. So play this level by level with realistic expectations. Now, as much as I want to make sure I keep you guys safe and I give you that inside bearish, idea and thesis, I want to also, not, how do I want to say this? I don't want to not be optimistic. I am so naturally a bullish person and like to see things go up that, that's been the big thing for me with trying to help people, is not giving them too much of, my natural instincts, which is to almost be a degenerate gambler at times. I want to give you guys better, options and better opinions and better advice than even sometimes I take myself. I often tell my closest friends, if you took my advice on these things, look how good you did. And then they'll say, oh, well, how did that work out for you? Well, I didn't take my own advice. I went and tried something a little bit more risky. I was being greedy. I wanted more reward. And I felt that I could afford to lose that money. And then you usually do if that's how you play it. If you're trying to play this game and you don't have money to lose, and this is a big deal for you, or making these extra fives or tens or hundreds or thousands or whatever it is helpful to you, and it's not something that you can afford to lose, then that's why I give you these, more strict guidelines and these safer plays to pay attention to, which are often safer than even the ones I take myself. Once we're in a bull market and once we're in an upward trend, believe me, I will come out and I will give you guys the crazier plays to take. But as of right now, I want to try to keep you guys safe, even safer than I keep myself at times. So if you say, hey, I want to take more risk, I want to, do this, I can afford to lose this money, whatever, then you can use these lines the same way. You could say, hey, I know that we're barely right here and might come down to touch this one, but I'm feeling bullish. I'm buying. You know what I'm saying? I'm buying. So you can use this information in these charts either way. Even if you want to be more bullish than me, even if you think that, my view isn't bullish enough or isn't bearish enough, you can use these same levels, to make those adjustments. If you think I'm being even too optimistic right now, go ahead and turn this green line back to red in your mind, or on your own screen, or in your notes when you say trade here, sell here, turn that back to red. And, pay attention to these bigger, safer grabs down here in these zones. Now, to not get you guys too confused, but to also not give you a bullish thesis and a little bit of that moon boy that everybody loves, let's take a look at this. This is a bigger picture of this situation. And if you see, going all the way back here, back before even the June low, or coming to the June low, basically, and then coming into June, the later parts of it, and really creating the June low right here, our real range was right here in this 32 all the way to 40, and sometimes pushing up and spiking to the 45. See that up there? Spiking up here to this 45, 46 range. This was our range right here. You can almost just delete this this line in the middle at 35, 36. I put that there for you because I believe it will act as resistance on your way up, and you should pay attention to it. But in the grand scheme of things, if you want that bullish thesis, you want that moon boy objective, here it is. You turn this $30 into support, and you bust back up here, and you show that you can turn 32 support, or even just keep, starting to push through it, and you see the momentum. You don't have any real resistance until 36 and then 40. Could you stop at 38 or something? Yeah, it happens. Markets love to trick people. But really, you become opened up to this $40 range again, and could start spiking into the 45 range. So, that's where I'd really be aggressively taking profits and looking for a pullback. Even if you're super bullish and you want to load back up, at least take your profits when you spike into these zones and know that it's most likely going to pull back. Just look back at history. You spike in, boom, you come back out. You come up, you touch it, you come back down. And if we start ranging like this gives you guys a really nice range to play with. You're talking about being able to buy at 35 and sell at 40 consistently, or buy at 32 and look at 40 consistently, it really opens up the range for your trading and really increases and maximizes the potential profits that you can pull on these trades. So, there's your moon boy thesis. There's your bullish objective, is to get back into trading in this $30 to $40 range. Prove that 30 is really our support. We're done with this downward trend. Even when we come back up to 38, we push back down, can't break 30. And let me come back in and change these reds to green and make these green lines for buying. However, until we get to that point, if you actually are trying to, follow me, trying to take my advice, trying to later on say, hey, you helped me or you didn't help me, or you wasted my time or didn't waste my time, here's what I'm trying to say right now. Pay attention to these immediate levels. Pay attention to these, short-term situations. Also, as I always say, look left for, confluence of history and, what it's going to create for you. Well, look right here. You look back here on Thursday of last week, and you look back over here on Tuesday of right now, we are definitely getting reaction in this same zone. So, I might as well just come in right here for you and give you guys a red one right here, and let you know this is your box right now that you're bouncing and hitting and coming back down from. Now the real question is, do we push down just to this 30, or do we push down to this 29, or do we just lose this whole structure we're creating? Because as of right now, we are starting to create a temporary upward trend, and this is going to be what it is until proven differently. So for right now, this is the momentum. This is the way the markets are going. And there's a good chance this continues for a while, and it does turn into a seasonal rally, a midterm rally, a giant short squeeze as well, all piled into one nice little mix here for you to run with. But don't get confused on the bigger picture, which is on a global scale, on a macroeconomic scale, on an overall whole picture of stocks, inflation, war, all these different things going on. We're still in a downward trend. We're still in a bear market, and we are not out of that yet. We have not proven that the bottom is in yet. We have not changed sentiment. We have not changed narratives yet. So, just trade wisely, pay attention to preservation of capital, and make decisions that make sense. You guys, I'm just trying to give you the simple decisions to make sense out of. If you guys need anything different, let me know in the comments. Happy to try to help you guys out.